And it's time to move ahead in the revision lectures, guys. The next and the last one that you heard, we've covered three. We've covered scope of income, residential status, we've covered IFHP, and we've covered introduction to tax. The next and this one that we're looking at is a very, very important one. A lot of people skip it because they feel it's too many details. How do you remember it? But you're not going to have that problem because we've done it well and we're revising it really, really often. So let's have a look at the next chapter. Guys, this next chapter is called exempt income. It's the most happy head or the happy section because guys, on this you have an income but you don't have tax. So that's the best thing to have. And we will learn this with every possible shortcut and everything included. Guys, have a look at exempt income, including agriculture income. Let's first discuss agriculture income before we move to other exempt incomes, and everything will be covered here in this revision lecture. Guys, when they were looking at exempting incomes, the first income that they wanted to exempt under section 10.1 is under 10 is a section and 1 is a clause. Here we don't have subsections, here we have clauses. So 10 clause 1, the first thing that they wanted to exempt was agri income. Agri income, because the government said that farmers, etc., need exemption and hence they exempted agri income. So what is agri income? We'll see. But first we will differentiate between what is rural agri income and what is urban agri income. Guys, here also we take the surgeon's example. The surgeon had a rural agriculture land on the outskirts of the city, Bangalore, Mumbai, etc. He had a rural agriculture land. He would grow things there. He would grow cotton, etc. But sometimes he would also rent it out and not grow anything. Besides that, he had a farm building. Guys, that farm building used to where it was his dwelling place. Whenever he would be at the farm, he would stay there, and also he would give that extra space to other people to store goods for some nominal rental income. So he was making income from there as well. Guys, what is agri income? Section 10.1, in which exempts agriculture income. Agriculture income basically means through any basic operations, when you grow, like you cultivate, you sow seeds, you grow some crops, etc. On from that, if you have any income, that is exempt. Plus any subsequent operations, that means any cutting, pruning, any harvesting, any cleaning and storing, etc. On that also, if you have any income, that is also agriculture income. Guys, any income from seedlings or saplings that are grown and then sold, that is also exempt income. Plus any flowers and creepers that are grown and sold, for that also is exempt agriculture income. When you rent out your agricultural land, that renting, guys, is also agriculture income, although you don't farm. But because the government feels so bad about these farmers, they've also exempted this. Not just that, any income that you have from the farm building, like renting the farm building for other people to store goods, etc., that is also exempt. Guys, all this is agri income, which is exempt. There is one income which is not agri income, and hence I'm putting them in a star. Guys, when you sell this rural agriculture land, sale of rural agriculture land, when you sell this rural agriculture land, although it's not agriculture income, but guys, even this one is not taxable. So इस पे tax नहीं लगेगा, but this is not a part of agricultural income. All right. If you understood this, let's look at what is urban agricultural land, what is urban agricultural land, and why does it matter whether it is land is urban or rural. Guys, first, if depending on population, if your town has a population of just 10,000, that means a very small town, then anything outside of the municipal limits is rural area, within that limit is urban. If your town is slightly bigger, that is more than 10,000, up to 1 lakh, if the population is up to 1 lakh, then the town plus 2 kilometers, guys, is urban. Beyond that is rural. So we have to focus on any one. Guys, let's focus on beyond 2 is rural. If your town has a population of 1 lakh plus up to 10 lakhs, then in that case, up beyond 6 kilometers will start rural. That means, guys, not just the city, but even some more kilometers is urban. And guys, if your town is like Bangalore, Mumbai, Pune, Delhi, etc., where the population is more than 10 lakh, then beyond 8 kilometers will start your rural area. Till then will be urban area. And why does it matter whether agricultural land is in urban or rural area? There are two differences. In urban agricultural land and rural agricultural land, there are just two differences. Please understand the two differences. First is sale of urban agricultural land is taxable. So if you sell the urban agricultural land, then it is taxable. That means, remember, he wanted to sell the land, he wanted to sell it for 50 lakh rupees, but his friend offered him only 37 lakhs. He did not sell it. But if he had sold it for 37 lakhs minus his cost, let's say he bought the land for 1 lakh and indexation added up to 7 lakhs. So whatever is income, if it is rural, it was not taxable only, but if it's urban, it will become taxable. That is one difference. And the second difference, that income from farmland. Guys, income from farmland. What if in case of urban agriculture land, in case of the farm building, he would put a OYO there or a PG available board there, then in that case that is also taxable. So purpose is not seen. Even any income from farm building will be taxable. So two differences: sale of urban agricultural land is taxable, and income from farm building is taxable. Earlier these were exempt. Now that you know what is urban, what is rural, what is agriculture income, and how is it exempt, let's move to a scheme which is very, very important. This is called scheme of partial integration. We've jokingly also called this a scam of partial integration, because people think your agriculture income is not taxed, but there is a small catch to it. They say, if you're satisfying two conditions, what is the first condition? If you're someone who's subject to basic exemption limit, that means if you're an individual, or if you're an HUF, or if you're an AOP BOI, or if you're an artificial jurisdictional person, that these people enjoy a basic exemption limit. And if your agri income is greater than 5,000, that means after expenses, so agriculture sales minus agriculture expenses, that is agriculture income. If that is more than 5,000, and your non-agriculture income, that means from other heads like salaries, PGVP, capital gain, IFO, etc., is greater than your basic exemption limit, then if these two are satisfied, then the scheme of partial integration is applicable to you. So what is the scheme, guys? What is step one? Step one is where you shock the person. So you take the agriculture income plus you take the non-agriculture income. That means the total, all the incomes you add, and you calculate the tax, only the basic tax, no surcharge, no cess. Next, step two, guys, you basically soothe him out, you calm him down. First step shocks him, second step calms him down. He tell him the basic exemption limit, that is either 2 lakh 50 or 3 lakh or 5 lakh depending upon his age, basic exemption limit plus the agriculture income we will add, and on that we will calculate tax and we will minus in, so he calms down. And step 3 is nothing but step 1 minus step 2, and this, guys, is your basic tax that is payable under the scope of partial integration. But please remember, agriculture income more than 5,000 and non-agriculture income has to be more than basic exemption limit. That means if you're earning from both ends, from agriculture and non-agriculture income, to such people the scheme applies, guys. And the last in agriculture income is composite income, where you have such businesses where you're earning business income as well as some agriculture income. Example, tea is agriculture also, but tea powder etc is business income. So tea or coffee or rubber. In coffee there is another part, there is coffee 1 and coffee 2, so I'm just going to write coffee 1 and then coffee 2 and rubber, and then others like potatoes, and then which are made for lays, or tomatoes which are used to make ketchup. In that case, what is composite income, we'll see, guys. In all these cases there is certain amount of business income and then there is certain amount of agriculture income, but agriculture income will not look at, will only focus on one, that is business income. In case of tea, what is the rule? India consumes 8 cups of tea every day, and in that there is 40% milk, so business income is 40%. So you take the sales of tea, you minus all the expenses, and whatever is left you will bifurcate. 40% in business, 60% of course is agriculture. Coffee which is only grown and cured, nothing else, only grown and only cured, then 7B, 7 cups of coffee and barista makes a coffee, 25% is business income. But grown, cured, roasted, grounded, flavored, etc., then 7B says 40% is business income. In case of rubber, there is 35% business income. And in case of other example, you have potato farm, which the potatoes are used to make lays or chips. In that case, what is the transfer price, what is the sale price for you, and the cost price for the chips, that is the market value or the market price. If that is not available, then cost plus profit. Guys, this is composite income. In composite income, please mind you will take your sales and you will minus all the expenses that are allowed to you, finally to get your income, which will be split. And by this we end agriculture income. Let's move to the next chapter, guys, immediately after agriculture income, because we have not finished exempt income. This is just a part of exempt income, this agri income. So let's move to the next one. Let's move to the next exempt income. The next exempt income only has lots of sections. So please, under section 10, guys, exempt income, let's look at the other exempt incomes. Guys, 10.1, the first thing is for agriculture income, which is exempt. The second thing they spoke about is HUF. When the HUF earns income, let's say rental income in our surgeon's HUF case, or interest income, then from that income, the HUF will pay its own tax because it's a separate tax entity. And whatever is left can be distributed to the members, and that share of income of the members is exempt under section 10.2. Same way, guys, in 10.2a, in case of partnership firm, when the partnership firm earns money, it pays its own taxes, and whatever is remaining after that is distributed to the partners, and that is called share of profit, and that is exempt under 10.2a. 1042 is non-residents when they earn interest on NRE account, guys. NRE is a non-resident external account. Only non-residents can open these accounts, and the interest on this account is exempt. Why do we pay tax and they don't? Because they get foreign exchange into the country. That is exempt. 1042. Guys, 1062. Just like the India had Indian embassy in France, the French also had the French embassy in India, right here in Mumbai, Bangalore, Delhi, etc. They have a French embassy where the French employees work. And guys, remember that line: we tax our employees, they tax their people. So they will tax their people. So we'll have to exempt them. So that is the French embassy. French embassy. I'm just writing that. 10.7, guys. To the Indian embassy in France, when we pay 7 allowances, those are exempt. Those 7 allowances are exempt under section 10.7. We have a shortcut for each of them. That's the best part. Next, guys, is 1010D. D is on death. You get life insurance, guys. Any amount received on death, you know, is exempt under 1010D. But there are certain income which are not exempt. Example, when you get the money back, other than death, if you get the money back, but the insurance premium is not small. How big, guys? Earlier, before 1/4/2012, 20%, which is now reduced to 10%. And for handicapped people, etc., 20%, which is now reduced to 15%. Up to these limits is perfectly okay. So if the insurance policy was bought before 1/4/2012, then 20% premium is okay. After that, 10% premium is okay. And for handicapped people, the date changes from 1/4/2013. So they get one additional year of 20%. It depends upon when you take the policy, guys. Even in 1 year, if the premium goes above that, then the amount will be taxable on receipt. Next, guys, is 1010 BC, big catastrophe. On a big event catastrophe happening, when you get some money, that is exempt under 1010 BC. 1012A and 1012B. Guys, the government met at CCD and they came up with a new policy called National Pension Scheme. CCD had 12 rupees coffee, and 12A and 12B speak about that National Pension Scheme. When you withdraw money in the middle, beach mein, or in the between, then they will exempt 25% of your contributions, they will exempt. And 12A, that is after 60% of the total contribution, of the total withdrawal, sorry, they will exempt. So 25% of your contributions will be exempted here, and 60% of the total amount withdrawal will be exempted here. After it has a higher exemption because you waited for a while. Next, guys, is 1016, where you get, oh sorry, 1015, my bad. Guys, 15% interest. Post office was giving 15% interest, and in that case there is an exemption of 3,500 for single holder, and if multiple holders, then 7,000 entirely. Guys, 1016 is education scholarship. In that case, if you get some education scholarship, that is exempt. So that is education scholarship. 1017 for MLAs, MPs, etc. They get 70 allowances. So MPs, MLAs allowances are exempt under 1017. 1017A is at the age of 17, the research surgeon got an award for, remember, syringe which does not pain. Prickless syringe, probably. For that award, guys, that award is exempt under 1017A. 1018 is gallantry award winner, but not the award. Award is exempt under 1017A, but gallantry award winner, when they get family pension, that is exempt. So that is family pension. 1019, unfortunately in India, soldiers lose their life at 19. So armed forces personnel who lost their life, in that case, the family pension will be exempt here. Pension as well as family pension, both, sorry. 1026 AAA, above. Guys, in that case, Sikkimese individuals who are not married outside the community, women, any income from Sikkim as well as dividend interest income from entire India is exempt. This is Sikkimese individual. Next, guys, is 1032. 1032 says that if you have a minor child whose income is clubbed into your hands, you will feel bad about it, but they give you a maximum 1500 exemption under 1032. 1034, I'm just writing it down. It's no more an exemption. Dividend earlier was exempted under 1034, but this has been withdrawn now. 1034A, guys, when they do a buyback of shares. In our example, Reliance did a buyback of shares when the share prices fell. And in that case, if you have a gain, that is exempt on buyback. So who pays the tax on that? That tax is paid on quick appreciation under section 115A. The company pays the tax on that 20%. Next, guys, is 1037. Remember, 37 lakhs, he didn't want to sell the land, urban agricultural land, but forcefully had to sell it because the government wanted to compulsory acquire it. In that case, 1037, they say there's a compulsory acquisition of urban agricultural land. Why are they exempting it? Is it because of compulsory acquisition? No. Compulsory acquisition, they pay you money and you have to pay tax. But because it's an urban agricultural land, they have a soft heart for it, and they exempted under 1037. In 1043, when you do a reverse mortgage, what is a reverse mortgage? You stay in your house, you give the house papers to a bank, and they start paying you money every month. And why do they pay you? It's a loan. And how do they recover the loan? When you're no more, they'll take over the house and they'll sell that house and recover the money. So that income that you get every month from the bank is not an income under 1043. It's exempt. This is reverse mortgage. Next, guys, is 10AA, awesome area. This is not an exemption. Exemptions have ended. This is a deduction under 10AA. This is only and only if you have a unit in an SEZ. Guys, if you're manufacturing and exporting, or if you're providing export services from an SEZ, then on the export profits you'll have a benefit. So every year you have to calculate export profits. Export profit is nothing but your export sales upon total sales into the profit. That is your export profit calculated every year. And for the first 5 years, 100% is exempt. The next 5 years, 50% is exempt. And the next 5 years, 50% or the amount you contribute to a special reinvestment reserve account is allowed as a deduction. Guys, please remember the last 5 years only have a condition. Guys, now in this case, anything outside the SEZ unit you completely ignore. This is benefit is only and only for the SEZ unit. In case of special economic reinvestment reserve account, that reinvestment reserve account, the money that you put in has to be used within 3 years of the money putting in. So the year you put in, ignore that year. After that 3 years, you have to buy new assets with that, buy new plant and machinery for the SEZ unit. In case you misutilize it, then it will be taxable in the same year. And if you don't utilize it, then after 3 years, it will become taxable again, because you made a promise of utilizing it for reinvestment. That is 10A. And with that, guys, we complete another chapter beautifully well. Guys, this one is exempt income. A lot of people get nervous around this. Of course, we have not completed exempt income. There are certain exempt income which are in the different heads, like salaries has some exempt income, which we will do there. But more or less, exempt income, 90% is completed, 10% we'll see in respective heads. I hope you understood everything. Let's move to the next one after this video. Thank you.